understand the standard well, we'll also understand the structure of the Ind AS. How is the Ind AS structure defined? Which all standards are there? What to do or how can you compare it with your accounting standards? And how to compare this with the IFRS. So let's understand the structure of Ind AS in detail form. So on and whole, there are 41 accounting standards which are issued under Ind AS regime. So these 41 standards also includes 3 standards which are replaced by new standards. So let's understand the standards one by one and how it is linked with the IFRS and how it is linked with the accounting standards, our old Indian GAAP. So friends, one more logic or one more important concept I would like to explain is, in case of Ind AS, how to link it with the IFRS standards. Wherever the number is Ind AS 1, you have a corresponding IFRS standard which is called as IAS 1. If it is Ind AS 2, you have a corresponding standard which is IAS 2. But in cases where you have Ind AS 101, you have a corresponding standard called as IFRS 1. Ind AS 102 has a corresponding standard called as IFRS 2. So all the Ind AS which are below the 100 series has a corresponding IAS of the exact same number, and the Ind AS which are above the 100 series, 101, 102, 103 have the replica IFRS series called as IFRS 1, IFRS 2, IFRS 3. Why understanding this is very important, friends? Because at the time of application, if you face any issues, you should be well versed about how to search it into the IFRS regime. If there is any additional guidance under IFRS, if there is some of the publication under IFRS. So that is why it is very important for you to understand how to correlate the standards with the IFRS standards. So they have kept the entire numbering same. Only the difference they have made is IFRS has been numbered as above 100 and IAS have been numbered as the below the 100 series with the exact same number. So this is a very good move that the government has made. So let's go into the standards one by one. Now friends, under Ind AS and when we'll understand the standards, I will also explain you in short what are the differences or what are the core principle oriented differences between these Ind ASs and the corresponding accounting standards. So on and whole, at least you will get an idea about how these standards are different from your accounting standards. And wherever there are very minimal differences, I'll just mention that there are very minimal differences under this standard, and you can apply it. I mean, the application does not result into the major differences as compared with the Indian GAAP. Now, starting with the first standard, which is called as Ind AS 1, presentation of financial statements. This standard gives a guideline about what are the financial statements, what are the components of financial statements. I will also discuss the components of financial statements in a very detailed manner in my subsequent slides. And what are the concepts to be used in the while preparing the financial statements. So each of these concepts have been disclosed in the Ind AS 1. And there was also a similar standard under your Indian GAAP also. Subsequently, the second standard is Ind AS 2. You also have a complementary standard or a corresponding standard in AS, which is AS 2. Compared to Ind AS 2 and AS 2, there are very minimal differences. There is only a slight difference in the scope, in the coverage of the standard. Other than that, on a whole basis, there are very few differences or ignorable differences, which is for application of Ind AS 2. Third is Ind AS 7, statement of cash flows. You also have a corresponding standard under AS. One of the important difference while comparing Ind AS 7 to the AS 3 is nothing but your determination of cash and cash equivalents. Under Ind AS 7, even your bank overdraft has to be reduced at the time of computation of your cash and cash equivalents. So in your cash flow statement, the bank overdraft is reduced from your cash and cash equivalents, and accordingly the balance is reduced and it is not shown in your changes in working capital. So this is one of the very important difference. Subsequently, you have Ind AS 8, accounting policies, changes in accounting estimates and errors. Even your accounting standard has been brought in line with this standard. One of the important differences, your estimates, that is your change in estimate of depreciation. Your depreciation is no longer a change in your change in policy, but it is a change in estimate. So in this form, every standard has a difference as compared to your accounting standards. The most important differences are in the standards of revenue recognition, in the standard of leases, in the standard of deferred taxes, and in the standard of financial instruments, which is one of the most important standards. If you see, friends, here there is a standard called as Ind AS 11, construction contracts. This standard was previously issued by MCA when the first roadmap was issued. Subsequently, this standard was replaced by Ind AS 115. So currently, in practice, for the purpose of revenue recognition, you have a standard called as Ind AS 115. This standard was first time applicable on 31st March 2019. And whenever the companies converged for the first time, phase 1 and phase 2 companies, they had applied Ind AS 11 and Ind AS 18 for the purpose of their application. Then you have Ind AS 12, which is called as income taxes. Now, friends, in these standards, that is the computation of deferred tax, there are various differences or there are logical differences as compared to your accounting standards. You have a difference between the basic logic of computation of deferred tax. So, under Ind AS 12, you follow a balance sheet approach. And here I'm giving you overview of all the differences so that you get a glimpse of all these standards. So under Ind AS 12, you have been given a balance sheet approach for the purpose of computation of deferred tax. And they have also given various guidance how to recognize deferred tax in your consolidated financial statements, how to recognize deferred tax on unrealized profit on inventory, how to recognize deferred tax on investment in subsidiaries, investment in joint ventures, investment in associates. So such detailed guidance has been given under Ind AS 12, which was not given in detailed form under your previous standard, which is called as Indian accounting, Indian GAAP. It was not given in that detailed form. Then you have Ind AS 16. So friends, you might be also aware that your AS 10 has been also bought in line with your Ind AS 16. So on an whole basis, after the MCA revised AS 10 or the revision was bought in AS 10 by ICI and subsequently adopted by MCA, the AS 10 or revised AS 10 is more in line with the Ind AS 16 and there are no longer any differences compared to the Ind AS 16. Then, friends, there is a standard called as Ind AS 17, which is leases. This standard was very much similar to our Indian GAAP standard, but subsequently, this standard has been replaced by Ind AS 116 leases. And when you compare the accounting given under Ind AS 116 and vis-a-vis corresponding AS 17, corresponding AS in the Indian GAAP, there are many differences under these standards. So there is a complete change in the way in which the leases are accounted. Under Ind AS 116, leases are accounted in the balance sheets. Appear in your balance sheet as an asset, and your leases appear in the balance sheet. So this is a classic difference. Under Ind AS 116, no longer your rent expenditure is shown in the statement of profit and loss, but you have an expenditure called as depreciation and interest. So in spite of the fact that you're entering into lease arrangement, still you don't have a component called as rent expenditure in your P&L, but you have interest and depreciation. What is accounting for it? You have to discuss detailed Ind AS 116, but I'm just trying to give you a glimpse of each and every standard. Then friends, there is a standard called as Ind AS 18, which is for the purpose of revenue recognition. This standard was also replaced by Ind AS 115. So previously there was two standards which were called as Ind AS 11 and Ind AS 18. These both standards have been replaced by Ind AS 115, which is called as revenue from contracts with customers. So in Ind AS 115, what is the basic concept? We'll discuss in the detailed form in the subsequent slide. Then we have a standard called as Ind AS 19 for the purpose of employee benefits. So one of the important differences which is given under the employee benefits is how under the Indian GAAP we used to recognize the entire component of gratuity in the statement of P&L. So whatever is the provision for gratuity, we used to recognize in the P&L as employee benefit expenditure. Whereas under Ind AS, you have to recognize actuarial gains and losses separately. And these actual gains and losses are to be recognized in OCI. What is OCI? I will discuss in detailed format in the subsequent slides. So this is one of the major practical differences. Any company which is converging into Ind AS for sure will have this difference when they'll converge to Ind AS, because many companies or majority of the companies have the provision of gratuity which they measure using the actual valuation. So if they're measuring their provision for gratuity using actual valuation or any other long-term benefits using actual valuation, in such cases, they have to transfer the actual gains and losses to the statement of other comprehensive income, which is called as OCI. Moving on to the next standard, which is called as Ind AS 20, accounting for government grants and disclosures of government assistance. So in this standard also, there are very important differences compared to your previous Indian GAAP. Under Indian GAAP, you had a concept of promoter's grant. Under Ind AS, there is no concept of promoter's grant. Each and every grant received by the government has to be mandatorily classified into asset-related grant or income-related grant. Other than this, you don't have any other classification for the purpose of Ind AS 20. So this is one of the major differences compared to the previous Indian GAAP. Further, you also have a guidance on the government assistance. What is a government assistance? What are to be classified as a government assistance? And what are the disclosure requirements for the purpose of government assistance? So, when you will classify a particular assistance as a government assistance, there is no kind of accounting required, but there are disclosure requirements. So this is very important. Moving on to the next standard, which is Ind AS 21, the effects of changes in foreign exchange rates. You had a corresponding standard called as AS 11. In AS 11 and Ind AS 21, conceptually everything is similar, but there is an important concept in Ind AS 21 is determination of functional currency. So what is functional currency is a currency which is of the prominent importance to the entities. So if a currency is of prominent importance, which currency is of prominent importance to that particular reporting entity, it is the functional currency of the entity. They have given various guidelines for the purpose of determination of functional currency. And if these guidelines are satisfied, that is the functional currency of that entity. So determination of these functional currency changes the manner in which or what kind of foreign exchange differences will be debited to P&L, what will be stated to the statement of other comprehensive income, that is OCI. So everything is dependent upon this determination of functional currency. So this is very important under this Ind AS 21. Moving on to the next standard, which is called as Ind AS 23, borrowing cost. Under Indian GAAP, also you have a similar standard called as AS 16. So what is the difference between these two standards on an whole or on an overview basis? Ind AS 23 and Ind AS or AS 16. So as a concept, there is not much difference. So here also you have conditions for capitalization. Here also you have time limit for the purpose of capitalization, and the concepts are similar, but the capitalization of borrowing cost is determined at or is computed as per the effective rate of return in the borrowings. So what is that is given under the financial instrument standard. So the manner in which you will compute the interest that will be capitalized in your property, plant and equipment has to be determined in accordance with the financial instrument standard. And this computation changes on Ind AS, and which is the bigger difference under the Ind AS compared to the AS. So what is the difference? Purely it is as per the financial instrument standard. Then you have Ind AS 24, which is the related party disclosure. AS, you have a corresponding AS called as AS 18. Friends, why I'm telling everywhere what is a corresponding standard? Because under the Ind AS regime, you also have certain standards which are completely new in nature. And that is why these standards, wherever they have a corresponding AS, we were discussing in detail. So under the related party disclosure standard, here you have certain important or certain additional relationships which are covered in Ind AS 24, which were never there under AS 18. This is the first major difference. And the second major difference is there are certain additional disclosures to be given in the related parties. So what are, for example, such disclosures? For the purpose of key managerial remuneration, under AS, you used to just show it as a single line item. But under Ind AS, you have to divide that remuneration into the components. You have to show what is the short-term benefit component, what is the long-term benefit component, what is post-employment benefit component, what is the ESOP component, that is share-based payment component. So the entire remuneration given to the KMPs has to be divided into these 4 or 5 components. And you cannot show it as a single line item in your financial statements. And the relationships, important relationships which are additional over here is under Ind AS, all the directors, whether they are independent directors, whether they are non-executive directors, whether they are executive directors, each and every director is a related party to the company. This was not the case in the AS. So under this Ind AS, every director is a related party in the to the company. So this difference also, friends, is applicable to each and every company, because previously under AS, non-executive directors were not covered as a related parties. So this is again one of the important change. Then we have Ind AS 27, Ind AS 28. So Ind AS 27 and Ind AS 28 is nothing but the standards which are governed for the purpose of recognition of the standard financial statements and for the purpose of determination of investment in associates and investment in joint ventures. So they have given the criteria how to disclose these kind of investments. So what are the differences over here is, we'll cover as a conceptual level. Under Ind AS 27, you have been given an option. So if you have an investment in subsidiary, you can either recognize it at cost or you can recognize it in accordance with Ind AS 109, which is called as the Financial Instrument Standard. So इसका मतलब क्या है? आप वो इन्वेस्टमेंट इधर कॉस्ट पर रिकॉग्नाइज कर सकते हो या 109 में दे हैव गिवन योर ऑप्शन टू फेयर वैल्यू दैट इन्वेस्टमेंट एट ईच रिपोर्टिंग डेट. So this can be the option availed by the company. This was not there under your previous AS. This is one of the biggest difference. Under Ind AS 28, investment in associates and joint ventures. One of the most important differences in your accounting standards, joint venture आपके books में consolidate होते थे using proportionate consolidation method, friends. So what we used to do is, if sales of your joint venture are say 100 and your share is 50%, you used to show 50% as your own sales. Then, if the assets of the joint venture are say 200 and your share is 50%, you used to show 50% of your assets in your own financial statements and used to add up to the respective line item of the assets. But under Ind AS, they have said that whether it is investment in associate or whether it is investment in joint ventures, in both the cases, you have to add up or you have to consolidate these investments using equity accounting method. There is no concept called as proportionate consolidation method under the Ind AS regime, and all the Ind ASs have to be recognized at the equity accounting method. Moving ahead, there are Ind AS 32, which is the financial instrument standard. I will discuss it subsequently. You have Ind AS 33, which is earnings per share. More or less, the standard is similar to what is under the AS, so I'm not discussing the differences. Even Ind AS 36, impairment is more or less similar to what was your previous standard. So moving ahead to the next standard, which is called as Ind AS 37. Provisions, contingent liabilities and contingent assets. Compared to your AS standard, which is AS 29, under AS 29, आप कुछ भी discounting नहीं करते थे. There was no concept of discounting under our AS regime. But under this Ind AS regime, any provisions which are long-term in nature or which are non-current in nature have to be discounted to present value. So for example, there are many companies who have provision for income tax, provisions for decommissioning, restoration. I hope you're aware of this concept when you had discussed AS10. The revised AS10 has this concept of provision for restoration, dismantling and decommissioning. So any kind of provision have to be discounted to present value as on the respective date. So this is one of the most important difference. Again, might be applicable to the majority of the companies because majority of the companies have some or the other kind of provision. You have provisions for warranties. You have any provisions for any particular litigations. All these provisions have to be bought to and disclosed at the present value. Moving ahead to the next standard, which is called as Ind AS 38. Now, friends, under Indian GAAP, you have a standard called as AS 26, which is compared or comparative to this intangible asset standard called as Ind AS 38. In these cases of Ind AS 38, one of the new concept what has been brought in under the Ind AS is there is a concept called as intangible assets with indeterminate useful lives, indefinite useful lives. So what does it mean is you can have an indefinite useful life for a particular intangible asset. For example, you have goodwill, and in such cases, you cannot decide what will be the recoverable value of the goodwill. So by default, goodwill has an indefinite useful life, and it has not to be amortized. So if any particular asset has an indefinite useful life, in such cases, these assets are not amortized and only are tested for the impairment. So this concept was nowhere there under the AS, and this concept is there under the Ind AS, which are assets with an indefinite useful life. So friends, everywhere I'm pinpointing the most important difference. So in my past history of my practical experience, I know which and every standard, which are the differences which no longer have relevance. So even if there's tweak in a definition, if in practical life you have the same application of it, so there's no sense of discussing those differences. That is why all the important and practical differences I'm discussing, so that you get a overview or you get a at least a bird's eye view understanding of the standards. Moving ahead, in days 40, there was no corresponding standard under the AS called as investment properties. Only there was a slight or minimal guidance in AS 13. What does the standard say is any kind of land and building. It only covers land and building. Please note it. Any kind of land and building which are held for the purpose of earning rentals or which are held for the purpose of capital appreciation are to be classified as investment property. So this is the definition given of investment property under Ind AS 40. So accordingly, depreciation and everything is there. But what changes is your disclosure in your balance sheet changes. And accordingly, there are also certain additional disclosures required for the purpose of investment properties, which is, for example, you have to show what is the valuation or what is the fair value of your investment property as on the particular reporting date. So if a particular asset is classified as an investment property, by default, in your notes to the financial statements, you have to disclose what is the fair value of that investment property. Now, you also have another new standard which was nowhere there under your Indian GAAP is Ind AS 41 agriculture. Under the standard, they have given what is the definition of an biological asset, how to recognize this biological asset. So as per the standard, the biological asset has to be recognized at fair value at each reporting date. So under ASP, whoever had the agriculture as a business used to do agricultural accounting on based on various guidances. So under Ind AS, you have a particular standard for the purpose of agriculture. Now, moving ahead to the next part. Under the Ind AS regime, whenever you're transiting from the accounting standard to the Ind AS, all the transition provisions are given under Ind AS 101, which is called as first time adoption of Ind AS or first time adoption of IFRS. So you have a corresponding standard called as IFRS 1, which was called as the first time adoption of the International Financial Reporting Standards. Then you also have Ind AS 102, which is share. Just to cover up in brief, Ind AS 101 gives all the requirements how to transit, whether you have certain optional exemptions, whether you have certain mandatory except. I'll discuss that in various detailed format. I have a detailed slide over it in my subsequent session. So that is why I'll just give a light over it and I'll move on to the next standard, which is called as Ind AS 102, share-based payments. Now, Under your accounting standard, you didn't have a fixed standard on this. You only had a guidance note issued by ICI. But over here, under Ind AS 102, you have a specific standard covered under Ind AS, which is called as share-based payments. Which is the most important differences. Under the guidance note issued by ICI, under your AS, your Indian GAAP, you had an option to fair value your share-based payments, to fair value your ESOP options, or to recognize your ESOP options using two methods. First method was the intrinsic value method, and second method was the fair value method. So these were the two methods given under the guidance note. Whereas under Ind AS 102, by default, you have only one method of recognizing the ESOPs. That is only the fair value method. You don't have any other method under Ind AS 102. So, moving ahead, under Ind AS 102, you also have a concept called as group share-based payments. So, this is also one of the important concepts. You will understand it in detail when you go into that standard. Ind AS 103. Now, in Ind AS 103, business combinations. So business combinations, over here, you have various differences. One of the most important differences, the business combinations have to be recognized at fair value on the acquisition date by default. Under AS, you had two options. You can either do it fair value or you could do it at the book value, which was also called as the pooling of interest method. So pooling of interest method is not there under the Ind AS regime. Moving ahead to Ind AS 105. Ind AS 104 is still in the process of issuing because they are evaluating the application to the insurance companies, and that is why this standard is not yet notified by the MCA. So this is a corresponding standard to IFRS 4. Moving ahead to the next standards called as Ind AS 105 and Ind AS 106. So these standards are also new under the Ind AS regime. You didn't have a corresponding standard under the AS. So this is nothing but the 105 talks about non-current assets held for sale and discontinued operations. So non-current assets held for sale is nothing but they have given certain criteria. If these criteria are fulfilled, then you have to disclose a particular asset as assets held for sale. And once the asset is classified as held for sale, no longer the company will provide depreciation over those assets. So depreciation is completely stopped for those particular assets. This is the most important guidance given under Ind AS 105. Discontinued operations, you had a similar standard under AS, and even the guidance given under the standard is also similar to what was there under the AS regime. Then you have a next standard we called as exploration for and evaluation of mineral resources. This is specific to the oil and natural gas companies, mineral resources companies. In this standard, they show us from which date you can start the capitalization of expenses up to which date. So they have given a time frame from which you can start your capitalization up to what date it has to be continued. Now, one standard I had left behind, which was Ind AS 32. So there is a complete family of standard for financial instruments, which is Ind AS 32, Ind AS 107 and Ind AS 109. And friends, financial instruments is the most important standard under the Ind AS because this is completely new and your each and every component of balance sheet has to be analyzed whether it is a financial instrument or not. And if it is a financial instrument, there is a complete criteria about how to classify that financial instrument, whether it is a financial asset, financial liability, or a equity, how to classify it, how to measure it at a reporting date, and how to disclose it. So the classification criteria are very extensive. The disclosures are very extensive and it is very critical. So it is one of the most difficult standard under the Ind AS or under the IFRS regime. And the second family of standard is Ind AS 110, Ind AS 111, Ind AS 112. So this is for the purpose of the consolidated financial statements, how to prepare a consolidated financial statements, which entities you can consolidate, for which you have optional exemptions, you might not even consolidate, how to consolidate, and in what cases you have to measure it at fair value. Everything is given under this standard, and even Ind AS 103, which is business combination standard, is also a part of this family itself. So this is about the consolidation standards. Then under Ind AS, you also have a specific standard on the fair value measurement. So fair value measurement is nothing but in any of the standard, if it says fair value, you have to come back to the standard and check how to measure the fair value in accordance with Ind AS. So this standard has given methods of fair valuation, which market to use, what are market participants, which is the best market, how to arrive at a fair value, what should be the common base of fair value. Everything has been given under Ind AS 113, which is called as fair value measurement. Then you have Ind AS 115 and 116. So as I previously discussed, these standards have replaced the old revenue standard and the old leases standard. Leases standard had explained you what is the basic logic. Under Ind AS 115, which is a revenue standard, they have given a 5-step model. So based on this 5-step model, you have to decide what should be the revenue recognition for a particular company. And this revenue recognition standard has brought a drastic change, mainly in case of construction companies, in case of retail market or retail trading companies who issue a lot of schemes to the customers. So they have undergone a most important changes in case of application of Ind AS 115. So this was a brief overview about what